a lot of money, because when they start moving up, they really move quickly, and whenever they start falling, they fall so quickly. So you need to be careful on them. Okay, now if you're going to trade, you first look at your coins. If you want to add, if you don't have all these coins, please click here. So when you click there, you go to spot. So when you go to spot, you're going to mark all the coins that you don't have, then you add them. So definitely you'll be able to trade them. But all these coins are not meant to be traded because they are optional coins. You have to choose what you prefer to trade. So we don't understand that, most of us, like we think that all these coins are meant to be traded. No, you just choose from those that you've been given, because when you just download your RoyalQ, there are coins that are on the app before you add all these coins. So those coins are maybe the initial coins that we've been trading them for the past 2 years, the same coins. So recently they added a lot of coins, but they are optional. You just have to click on the additional sign. You add what you want. You can even mark one by one. You say, I want this, I want that, I want this, I want that. Okay, just like that. Yeah. So after adding your pairs, you arrange them according to how they are performing by price. Use those small arrows, just like that. So you can arrange them according to how they are performing, from the best to the worst, or from the worst to the best, just like that. So in most cases, we recommend you to trade to trade those coins that are performing poorly. Excuse me, because they've lost value. Now, like cream, let's look at cream. So before you proceed, risk reminder, precaution. The coin may have large fluctuation in price. Please trade with caution and not, excuse me, not the risks. RoyalQ will not be liable for any loss or damage may occur through a transaction. So these coins sometimes are very volatile, so you need to trade them carefully. Okay. So after that means you have to be with backup. You have to be with backup, like margin calls. Now, when you get your chart, I want you to put your chart in 4-hour time frame. That's why RoyalQ provided a chart here. 4-hour time frame. Okay. So with 4-hour time frame, you look at the trend, how this coin has been performing. So you can see currently, you can even go ahead and put it on 1-day time frame. You see how it has been performing. Okay. So you see that we've been having an upward trend. An upward trend here. Now a downward trend. So what does that give you in mind? That this coin is in a downward trend, and probably don't be fooled just because it is at negative 15 that has stopped falling. No, it can still fall further. Okay. Now, sometimes you can find a coin in an oversold like this, but the price has not moved that big. So you have to look at the price. You may find that this coin has been pumping at 58, but in the morning it is at negative 20, and then negative 20. Then you find yourself that the price has not moved. It was at 58, but it has just gone down to 57. This means like it was oversold, but not so much. Then you have to look at the price that, oh, it was at 58, so it has not fallen so much. So some people think like whenever you see a coin maybe with big percentage change, it means like it has maybe fallen so deep. Sometimes it depends on the trend. For the current situation on the market, we are looking at a downward trend. Coins are falling. You can be able to tell that. But if the market is in an upward trend, you may find like coins tend to fall, but they don't fall in big prices or percentages. Okay, so you have to look at that. So that's why I told you have to look at the price. Okay, so you can see that for the past days, for the past months, we've seen cream at 97. Cream is at 56 now. So this is a very sharp fall. So we saw cream here. By the time it started rising, we saw it at 18. You see how the price has been. So we saw it at 36 here. Then we saw it at 50. Then it moved up to 97. So we've seen cream from 97 to 79, now trading at 56. That means it can even still fall up to 40. So you need to trade with margin calls. If you don't trade with margin calls, the market is not yours. It will have to discipline you accordingly. So if you've chosen the worst performing coin, make sure you have good capital. Make sure you have good capital. Now, according to me and how I've been looking at the market, there are coins that have fallen sharply, like WorldCoin, like Acro, like BET. Because now they have fallen and their prices have really fallen, that means they are very good to trade in a deeper market. They are still fighting to rise up. They are very good coins to trade in a deeper market. They are fighting to get up. This means you can trade them with sub positions. Yesterday we looked at the consolidation. So all coins, most of the coins are in consolidation. They're not deciding whether to take an upward trend or a downward trend. They're still consolidating in a downward trend. This means you can make a lot of money with sub positions in a downward trend. So what do you need? You need to set margin calls. So when you click next, this is the power of RoyoQ. Most robots lack this, the martingale strategy. But so this is magic. This is magic. So we simply use martingale strategy bot. That's what I always teach about, not the grid bot. Then we've got two sections here. You can go to YouTube and there is better explanation. This is for the copy trader and this is for yourself. You have to be flexible with your capital and create your own strategy. Yeah, this is what we consider. So this is for the copy traders. Simply within the app, there are traders that have got several strategies with different apps. So you can sync their strategy, or you can take their strategy. So if you sync their strategy, they'll be setting for you pair. But we need you to understand RoyoQ itself. Yeah. So you click next, this one here. Then you go to trade setting. So we have the smart create. Simply means with the default settings, default capital, good capital. So smart create is for those people you simply don't know what to do. You have got your big capital, then you have to choose smart create. You set some parameters, then you click, you save, then you start immediately. Don't waste time. Okay. Then we've got the manually create. This is where we concentrate on. This is where we put our settings. This is the power of RoyoQ. When you understand this section, you're good to go. When you understand this section here, you're good to go. You're going to make money. Just know. So this is where we set everything. This is where we instructed the bot. Guys, are we moving together? I may be talking to myself when maybe my microphone is not off. Are we moving together? I'm sorry to ask this, but how do you set that notification I'm seeing on your screen? The price fall and raise. Okay, I'm going to show you. I'm going to show you. Okay. Okay, if we're moving together, then that's nice. Okay, if you want to set your price alert, let's first go back to the home page because it is important. Okay, if you want to set your price alert, simply click on price alert. You've got that icon there, price alerts. If you don't have it, you go to more here. So when you go to more, then you're going to choose what you want to put on your home page. The icons you want to put on your home page, you click edit there. So by clicking on the on this minus, you're moving it from the home page. Then by clicking on this down here where there is more, where you see this, that means you're adding this on the home page. So if you have your price alert here, you can add it on the home page. Okay, let's say I want to remove the user guide, this one. So I'm going to click there, I remove it. Then let's say I want to add quantitative. Then I click there, I add it. Then after adding, I click that. Then definitely the quantitative is going to come on mine. So that's how you can add price alert. So you click on price alert. So when you click on price alert, you have to choose the currencies you want to always monitor on the market. Okay. How do you add them? Simply click here. So when you click there, you search for the coin you want to add. So let me add 1000 sats. So when I click on 1000 sats, you turn on the market alert. I want the market alert, so you'll be provided with the rise, rapid rise and fall, big market rise and fall, recent new high and recent new low, as you can see. Okay, then after you click back, so your 1000 sats come on your list. Okay, so definitely I'll start seeing its alerts just like that. Yes, proceed. What should we look at today? Okay. Now, when you get your setting, you're going to trade. This is where you have to divide your capital. This is where you have to instruct your board. I'll use $500. Make sure if you don't have $500, try as much as possible to get to $500 because it gives you a very, very good picture on the market. It helps you to compound so fast. If you don't have good $100 is good for the start. Don't be lied to, but it's not enough on the crypto market. It's not enough for the board. Yes, you can set it. You'll have to look at some progress after some days, but it limits you on the market. Okay. So if you have 500, you trade only one currency. It's enough. One currency is enough. If you trade more than one, then you're in for it. When the market goes against you, you don't have margin calls. I don't know. Okay. So cream has been so volatile. We've looked at that. Then we are going to set it with 500. That means I'm going to expose 10 as my first buying amount. I really want to make it so easy for you because it's not all about making 10. You can even start with 20 or maybe 50 as your first buying amount, as long as you know what you're doing. Because whatever you put on 10, whatever first buying amount you put there, it will cost you in the margin configuration when the bot starts to buy. So you should be knowing how to divide your capital well. So, well, for me, I've got a strategy that is very easy for everyone to use to divide your capital. So we've got strategies of margin calls where we have the double up, a very good one. We've got what we call the Fibonacci and the plus one, as we shall be looking at those. Okay. But for now, I want us to divide our capital in a very easy way that you can understand. So if my first buying amount is 10, this is the money that I expose first in the point. Then the open position doubled, do not enable this unless you've got good capital. This means that if I have 500, that means I should be with another maybe extra 500 to open this open position double, because each and everything that I'll put here is going to double itself by 2 times 2. That's why it is called open position double. So you don't need that. Then we've got, unless if you have that good capital, you can, like it is doubled, well split, so you can divide it, like you can open the position double. So the position will be double. Okay. Then we've got the AI margin call. We don't recommend that. Unless if you have that default settings, you can put the AI margin call. But for now, we don't need it. Then we've got the margin call limit. This is where we instructed the bot to keep buying. So these they're like times. So we call them calls, margin calls. So in most cases for me, I set at least 20 margin calls, even if I have 20. If I have $500, I set 20 margin calls. So you can as well set like that, as long as you know what you're doing, as I'll be showing you how to divide your capital, then you'll come up with the number of margin calls you want to set. But probably for me, I start from 20 because the market is not by my side every time. So the whole percentage profit ratio is the percentage you take out of the market whenever the bot sells. Then the whole percentage profit callback is the additional percentage. So this is the subtracted percentage, the buy and call, that I want my bot to rise up by 2%, then to increase by 0.1, then to decrease by 0.5, so that it sells. What does this help? This helps that if I did not put the buy and call back, it would have sold here, then it buys immediately here, then it goes up. But with the buy and call back, it hits here, it decreases by 0.5, it sells immediately, it is going to buy at a lower price. By the time it gets back here, you are in profit. So most of you see these callbacks and you don't know how to use them. So that's how they work. Then we've got what we call the distributed and we've got the margin configuration. We shall look at that. This is where we have to do a lot of work. So the margin configuration simply means moves with the first buying amount, then margin call limit. So when you do this and do that, you have to come and set them in details. This is where you instruct your bot in detail, so that it can start making those sales and buys according to the capital you have in your exchange. Then we've got what we call the distributed and take profit allocation. Whenever we are setting like 20 calls, we've got what we call subpositions, and they are very important in the game of trading with margin calls. Okay, subpositions simply start from 5 up to the number of margin calls you've set. If it is 20, 5 to 20. This means that the first 4 are not subpositions. The first 4 are not subpositions. They are sold on whole position take profit ratio here. The first 4. That means the rest are independent calls. They are independent margin calls. This means that if the fee is bought, it can be sold as the fee. Okay? The robot will not wait for the whole strategy, for the whole coin to sell out to give you profits. No, but it can sell the sub positions. That means you've got the main position as cream that you've said. That's your main position, the pair you set. But within cream, we've got sub positions. So that's what we refer. We refer them to sub positions. Now, this is where you instruct the bot to sell your sub positions on distributed and take profit allocation. So if you instruct, I want my margin calls to be from number 5 to the last margin call, I want them to be sold at 2%. This means that even if you're in a deeper market and the market rise happen to rise as a bit, you can find like it has sold some for margin calls, it has given you profit. So that's the advantage of using sub positions. That's why we recommend you a lot. Use sub position. They're going to keep giving you some good money in a deeper market. Okay. Then our big job here, when you understand this section, oh, this is where the magic is, margin configuration. Remember, we said that whatever you put on first buying amount and the margin calls you set, you simply come and break it down here, you divide it and instruct your bot on margin configuration. Click on margin configuration exactly here. Guys, are we moving together? Are we moving together? Are we moving together? I'm very happy for those people who really yearn to learn. If you want to learn, you're going to make money. That's it. Okay, guys, thank you. Thank you for attending. Thank you for attending. You've learned enough. You're going to scalp the market like never before. Okay, guys, let's proceed. Let's proceed. It's good that we are following. So when we get here, there is that best. There is that strategy I want us to talk about. I've been teaching on how you can divide your capital. So it will help you to understand these settings. Then you can come up with other strategies like the Fibonacci, the double up, the plus one, your own strategy, your own figures. Now, here, it simply means that we've got what we call the margin call, we've got what we call the multiple buying rate. It simply means that here, you're telling the bot to buy, you're telling the bot if I enter cream at 56 and it falls by 2.5% down the market, let it buy one time. Now, most of you are going to ask yourself, what is it buy? It is buy the money that you've put on first buying amount, because I told you whatever you put on first buying amount and whatever you put on margin call limit, this is where you set it on margin configuration. Let me hope we've got that. I'm not so speedy. Let me hope we've got that. I'll repeat myself. Whatever you put on first buying amount and whatever you put on margin call limit, you'll have to come and set it in details on margin configuration. Okay, let's proceed. Now, as I said, here you're trying to instruct the bot to buy, how much to invest, at what percentage if the market has dropped. This percentage only work when the market is dropping, not the market is right not when the market is rising. So here you're saying if the market falls by 2.5, let it buy one time. It is buying 10 on first buying amount times 1. That means it's carrying $10. Okay. Now that we've got this, let's try to divide our capital. Remember, we've got 500 as our capital. Okay. Then we used 10 as our first buying amount. Don't forget that. That means we will remain with 490. Let me hope we are moving together. Now, With 490, we are going to divide it here on the margin call. Here. So this is where we divide our cut. I want you to buy 10. The next call, I want you to buy. You're instructing the bot. I want you to buy 5. I want you to buy 20. Just like that. But you have to make sure you put the right figure that match with your capital. You're not going to put figures of 1,000 capital and yet you have $200. It will not work out. It will not work out for you. Of course, the robot will stop. It will not buy because you're instructing it to buy what's not available. It is not going to trade. It will just stop. It will not buy. If the trade is active and the market will not buy. That's why some of you come and say, I've set margin calls, everything is okay, but the bot is not buying. Then I tell you, you go and look at your settings. Make sure your capital is on spot wallet. Make sure that your binding is okay. Make sure that your settings are okay. They match with your capital. So this is how we do it. Now for cream has been so volatile. Cream has been so volatile. That means we have to come up with a good margin call drop. So for the good margin call drop, sometimes I recommend you at least to have some knowledge about the trading view. You need it. If you want to be sure of yourself, you need the trading view. Let's look at cream. You need the trading view because now we are about to find out the margin call drop you're supposed to. Where is cream? Let me just search. So you need the trading view. So this is our cream de la cream. So you see it has been having a sharp fall. This is for our time frame. This is for our time frame. So you have to first put it in 1 day time frame. So you look at where cream is trading. So you can see its next support area is here. Then the next one is here. So if you want to do it technically, then you'll have to come to your trading view 1 day time frame. Put your price range here. You measure up to. So definitely, if cream happens to go down, I don't think it will fall beyond this because this is big. This is 1 day time frame, negative 30. Negative 30. That means you've got 30. Okay. So if you don't know how to do that, I recommend you to use at least you can come up with figures that are uniform. Like you can use like this to 2.5. Okay. So when you add to 2.5, see 2.5 times 20, that's about 50. So it is very hard for a coin to fall up to 50. Though we've seen some coins. So if your coin has fallen up to 50 and you've got your sub position, that means you're still making money in the deeper market. You're still making money. Okay. So we take cream as 30 to 50. So we're going to consider 30. So how do you divide your 30? We've got 20 margin call. You got your calculator. You get your margin call drop that we've got from our trading view according to our analysis. Then we divide it by the number of margin calls we've set, 20 margin calls, to come up with 1.5. This means you can try to make this uniform and put 1.5. And if you're given a signal with a call drop or with a margin drop, this is how you divide it by the number of margin calls you've set. And let me hope you are following let me hope my explanation is good. It's not that complicated. So when you learn to do this, you're going to make money. So for me, my experience, I recommend you to collect your capital and trade sub position, trade with margin call, scalp the market with margin call. One shots are good but are timely, like they are seasonal. If the market is good, you can take one shot. Okay. But with your margin calls, you'll be always selling on the market as long as you've got the right settings. So you can try. This is the best way you can come up with these settings. Of course, you can come up with your own. You can put 2, 3, as long as you understand what you're doing. That's the best of it all. So this is the margin call drop. So here simply we are instructing the bot to keep buying when the market keeps falling by 1.5, 1.5, 1.5 times 20. That's about 30 margin call drop. So why are we doing this? We see that most of us who are floating, at least whenever the coin goes down, we float between negative 20 to negative 50. Okay? So that's why you need a margin call drop of about negative 20 to negative 50. Then you leave your bot. Give it time. Don't panic. Even if it takes a week without buying at least 50% of the margin call, give it time. Don't panic with it. Teaching is not easy. Guys, let me hope we are following. If you do not know how to do that, let me hope you've learned something about the call drop. The robot to buy the second call, it starts from where, as in count that drop over and take it, won't take it. About the call drop, the bot to buy the second. This is how it is. Like if I instruct the bot to buy, let me explain to you with the trading. So this is cream. Now if it starts falling again, so if I instruct it to fall by 3, it buys. So immediately, if it keeps falling again by another 3, starting from here, it will buy again. Or maybe 4, it buys. If there is another one, another call, if it falls again by a certain percentage of, let's say, like 3 again, 3.5, it buys as it goes down. This is how it works. Immediately, it buys the other, and it continues going down. It can buy the next, at least as long as it has reached that percentage. So with sub positions, if it buys this and the market happens to sell it, it sells it. Then it can buy again if the market goes down, or maybe it can continue up and it sells some other percentages. Please, can you explain how the robot is going to buy 5.9 times? It is very simple. The times you've put, you just have to multiply it by your first buying amount. If you've put 10 as your first buying amount times 5.9, the answer you get are the USDTs that are going to be carried on into the market. Just like that. It is very simple. That's what we are going to look at next, the other section. If your first buying amount is 10, then you've put 5.9 times 5.9. That means your robot is going to carry $59 when it buys. So that's what we are going to look on this section. So we've been looking at margin call drop. So we're going to look at the division of capital, the multiple buying ratio. How are you supposed to divide your capital? Remember, we've got $500. We've used 10 as our first buying amount. and we have remained with 490. So with 490, we're going to divide it here. So according to this strategy, since we are concentrating on subposition, okay, since we are concentrating on subpositions, and remember the best part of subpositions is simply from the fifth margin call. So when you look at that, that means you have to say that I need most of my capital in subpositions because it's where the robot keeps selling and buying when the market is down. That means you have to put big figures here. It's where you have to divide your capital. You have to put a lot of capital in the subpositions because the first four calls are not subpositions. They're not so important in the game because they are sold here. They're not sold here on distributed and take profit allocation. So that's why you see, like on this strategy, I've put small capital on the first four calls. Then about 80% of the capital, 70% of the capital is in starting from number 5, because this is where we want the bot to keep buying and selling. So we put there a lot of capital so that it gives us good profits, because it's where the bot will be exercising most of its the market movements. That's where it will be making the executions buy, sell in the deeper market. Let me help you get that. So with my 500, for me, I will expose very little capital. Remember, I have 10 already exposed. Then I'm going to expose very little capital here, as little as 0.5 times. Remember, these are times. Okay. Now, if you've been following, if my first buying amount is 10 and I've used 0.5, how much is going to be bought on those margin calls per margin call? For those who have been following, you can give me an answer. Brian says 5. Okay. 5. Okay. Let me look at your answers. I want to see if we've been followed. 5. Okay. Okay. Yeah, guys, thank you for learning. I'm very happy for that. Whenever you understand it, you'll come up with your own strategies. In fact, you can learn this to an extent that you say, hey, Juicy, I've come up with a strategy that has really worked for me because now I know how to divide these figures, my capital. So I've come up with this strategy. Can I share it with you? We never stop learning. I can teach you. And you do it. And you teach me as well. You take an extra step, you make research. And by the way, RoyalQ is very funny. I can teach you how to use RoyalQ. And you end up doing RoyalQ more than I do because you've discovered strategies. The way you twist your figures, the way you put your figure, you find yourself. Please help me. I missed where we got the 5. Which 5? Hey. Okay, guys, thanks for following. Amazing answers. 5. Yes. So how do we get the 5? Like I had explained to you. You just get the figure that you put here. And you multiply it by your first bank amount, which is 10. If it is 12, it is times 0.5. If your first bank amount if it is 100, it is times 0.5. So you know the answer to get there. So this means that we're exposing about $20 here, because if this is 5, 10, 5, 5, 10, this means that we have 10 as our first buying amount plus the 20 on the first 4 calls, giving us that. Let me hope we are okay with that. That means if we are done with the first buying amount, then we are done with this section. Then this is where we need to put our focus on. That means we've remained with 770. 770. So we need 770 to be in the suppositions, because it's where this is where we find the strength of the strategy. Okay. So that means that the first four calls are covered. We are remaining with this. That means if we set 20 margin calls and the first four calls are covered, then we are remaining with 16. We are remaining with 16. So if you remain with 16, you can try to make it uniform. Like, you don't want to bother yourself with figures because they are going to confuse you. This is what you're going to do. You go to your calculator. You get your 470 that has remained. Then you divide it by the number of margin calls that have remained, because we've covered the past. Now we are starting from the 5th. So from the 5th up to the 20th, there are 16 margin calls. This means you've got 29. So 29.3 are the dollars that are going to be invested. Okay. Okay. Let's say that we've got 29. I don't want to confuse you with the points 29. So how do you expose that 29? Give me some answers. Give me some answers. How do you expose that 29? How do you expose that 29 on your settings? How do you expose the $29 on your setting? Let me hope we are following. How do you expose your $29 on each and every margin call? How do you expose your 29? Guys, give me answers. Give me answers. I want us to make sure that we are learning. How do you expose your $29? Is the okay? Okay. Give me answers. Give me answers. Give me answers. Divided by what? You have to put there the correct answer. You cannot divide by what? Give me an answer. Okay, you are like divided. Okay, divided by 2.9. Okay. 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 No more answers. I need more answers. I need more answers. I need more answers. 1.8. Okay. 0.29. Okay. I'm getting different answers. 28 divided by the margin code. Okay. 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 I need more of your opinion, of your answers. If you have your different opinion, you can put it here. Then we come up with the correct one. Please, let's interact. On my Zooms, guys, we interact. We interact. 1.8. Okay. Okay. I think those are enough to give us a clear picture. Okay, let me see who has got it right. Who has got it right? The only person who has got it right is this guy here. This one here, 2.9. Then this one also 2.9. Then this is, here is a better one. 29 divided by the first buying amount. This is a very good explanation. So this is how you come. So the rest of the answers, guys, thanks for trying. Let's keep learning. But we exposed 2.9. Remember, we got 29. That means if you want to expose your $29, you have to divide it by your first buying 0.9. So here, when you put 2.9 here, this means it is 10 times 2.9 to come up with $29. Okay. Let me hope we are still following. Remember, we had remained with 470. Then we divided by the rest of the margin calls, the 16 margin calls, to come up with the 29.3. So to divide the 29.3, how do you expose? Because when you put 29, it is going to buy 29 times That's about 290. Of course, you don't have that. So you have to divide it by your first buying amount to come up with the proper figures. Divide by 10 to come up with 2.9. So you put your 2.9. You can even fix there that 3, 2.93, 2.93. Things are they are just easy, just like that. Though you can wake up and take some water. They're not so complicated. It's just just simple mathematics. And some of you used to chop chemistry, physics, mathematics. So for me, I did not do sciences, but at least with money, I can learn how to do this. With money, of course, I know. That means it is going to be buying 10 times 2.9 times, that is 29.3. Okay. Okay. Yeah, so if you divide all these figures, or if you add up all these figures, you come up with your total as a first buying amount, okay, plus that we exposed in the first four calls, then plus the 470 that we exposed from the fifth up to the last. Remember the 400, we divided it by the rest of margin calls starting from number 5 up to the last margin calls to come up with 29. It is going to be buying $29 on each and every call in sub, just like that. Then when you're done there, you click sure. Hey guys, let me hope you're moving together. Let me hope you're moving together. Is rounding off also possible because my calculator not calculating? I said you can avoid the points, like if it is like 29.3, you can decide to take 29, right? But when you divide, you can come up with the 2.93. So this is what you can pull. So don't round off a lot of capital which you don't have it. Are we moving together? This one wants to talk to me. You're supposed to come on Zoom and you want to talk to me. Come on Zoom. You're on Zoom learning and someone, let me even give him the link. Where is it? Guys, are we moving together? Are we moving together? Have we got that? If you've not got that, please, you can tell me to repeat. We are good. 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 Okay, let's proceed. Now, after saving your strategy, or after clicking show. Now, we've got what we call the distributed take profit allocation. The buying callback, it make it 0.4 is enough. So we've got the distributed and take profit allocation. So this is where we find these sub-positions, because sub-positions are independent margin calls. They can be bought and sold independently. Okay. Now, this means like if we are trading cream and cream is volatile enough to provide 2%, it is very easy. But for Bitcoin, it is not very easy to provide 2% because it's not so volatile. Ethereum is not. If you're taking like Beck, Worldcoin, they are somehow volatile. Okay. They're somehow volatile. That means you can use 1.3, you can maintain the default, or you can use 1.5. But if the coin is volatile enough, just making 2% is very easy for it. You can use 2%. If you're trading mostly, you're trading meme coins like Bonk, Bonk, Floki, Pepe, even Cream itself, though it's not a meme coin, but it is an air coin, like it has got that good volatility. So you use 2%. 2% will be good for Cream. So this means that you've got your 29 on each call. 29 times 2%. So you find that whenever the bot sells a call, you make $0.5. So if it happens to sell 5, if it happens to sell 5 sub positions, you earn 2.9. If it happens to sell 10, you earn 5.8. If it happens to sell 16, you earn 9.2. So on a very good market, you can find it can even sell more than 15 calls. How? It can sell the 5, it buys them again, it sells them the next day, that very day, it buys them again, just like that, when the volatility is good. So using this, you'll be entitled to earn at least ranging from $3 up to 15, according to my experience, up to 15, using sub positions, using 500 margin calls. Sorry, using 500 capital with sub positions. You can be able to make this as long as you've got your right settings. You've got your right settings. So this strategy gives you what we call consistency. You'll earn your $2, tomorrow $4, another day 8, another day 2, according to the market movement. According to the market movement. Okay. Then when you're done here, you click show. Now, most of you, I see you complaining in the group. Why are you trading on cycle? Okay, now guys, let me ask you a question. Why do you think they put these settings? To just look at them and leave them? To just look at them and leave them? No, you have to use these settings because they are put there to be used. You just have to learn how to use them. Now you find someone, I post my coin, why are you trading on cycle? Because I know how to use cycle. I know when to use cycle. I know how to use cycle. You don't have to. Maybe if you don't know how to use cycle, please ask. Now for this strategy, when you start trading, because the coin is in dip, I'm going to use cycle. I'm not going to leave it on one shot. I'm going to use cycle. I'm going to explain why. Because this coin has moved down. I've entered here. This means I'm trading it on cycle. So probably if this coin happens to move up before buying my sub positions, if it moves up slightly, just like that, like 3%, before it buys my sub positions, and it is on one shot, this means it is going to remove my strategy from the market because it is a one shot. The robot is going to sell off the whole strategy. So I need cycle to maintain this coin. If it rises before it buys my margin calls, then it sells the first 4 margin calls repeatedly. Then if it falls again, it buys my margin calls. Okay, that's why you need cycle, but you need to know when and how to use cycle. If this coin gets there and it buys my sub positions, and it rises and sells my sub positions. It falls, it buys, it rises, it pumps, and it sells all my sub positions. So I'll have to identify that this coin, I entered it here, and I've made a lot of money from here up to here. And it may fall again, you never know. That's when I put it on one shot so that it gets out of the market. Then after getting out of the market, I come up with another strategy. As simple as that. So I see people criticizing that, why are you using Cycle? Of course, Cycle is not for small capital. I said you should use Cycle knowing how and when to use it. Let me hope I make myself clear, guys. We are left with a few minutes. Let me hope I make myself clear. For me, I trade on Cycle until the coin overpumps, then I put it on one shot, then it moves out after selling everything, after I've made a lot of money out of it. Because for me, I maintain my coins like for 6 months. I can be with those coins as they're making money in sub positions. I don't trade coins to move out of the market, because with this strategy, I maintain. So in Cycle, when does the trade close? We don't need the trade to close to make money. Please, we don't need the trade to close to make money. Some of you we have got different strategies. If we are to maintain a coin, we are going to trade it on Cycle with good capital, not 100 or maybe $50. No, you're not going to use Cycle. It's going to affect you. Yeah, with at least with like, it depends on the coin you're trading. We have to identify these coins. Even with 200, you can trade Cycle, but you need to know the price. If it has overpumped, you see it has sold your first 4 margin, your all margin calls, your sub positions, you can put it on one shot, then it gets out. Because when you put it on one shot, this coin may move up before it buys even a single margin call. It sells you out. By the time you go to set it again, it has left your spot, your perfect spot you're supposed to enter. Let me hope I make myself clear. That's why we first put it on Cycle. Then with time, when the coin has overperformed, we put it on one shot and it leaves the market. But some of you have been told that that to make money, I need the coin to get out of the market. Who told you that? For me, I've been making 50%. I've been scalping 50%. I've been scalping 80% from the coins that I've maintained for 6 months. You see these big traders, that have got consistent performance on the market. You see today the market is bad, but this person is still making money. These people use Cycle and they use sub positions, and they maintain these coins for quite some time. They maintain them for quite some time. Okay, so let's say I have been holding Accro for about 4 months now, and is buying and selling sub positions in the deeper market, because I always open more margin calls. Okay, and it's giving me money. For you, you want, you think like you're going to bother yourself. You have good capital, you want to trade one shot. So every time you're putting in the trade, if they are not being bought, it moves out, you're bothering. Just set sub positions. First put it on Cycle. If it overpumps after buying your sub positions, then you can put it on one shot, then you'll get out of the market. Good capital, at least 500, 1,000, even with 300 and 200, you can trade. But depending on which coin, you don't have to go with the meme coin, which is very volatile. When you have 200 or 300, you can decide to take back because it is in deeper market. You can decide to take Wildcoin because it is in deeper market, and you set your margin calls with $200, with $300. But if the coin has overpumped, I don't see a reason to enter that coin when you have your $100. Go and look at the coins that have reduced in prices, that have dropped in prices. Okay, so some of you like, don't trade on Cycle. So you first understand what is Cycle. When do I have to use it, and when do I have to use it, and how do I use it? Let me hope I make myself clear. You have to know when to use Cycle and how to use it. Cycle is very good. For me, I like Cycle because it maintains my coins, and the robot sells them, buys them according how I want my strategy to be. That's why you see, for me, sometimes I don't need signals unless if I'm going to trade the one shot. I just buy my coins. I put settings. I maintain them like for a month, for 2 months when they're making money. When they overpump, by the time 2 months, you have 1,000 in a coin. By the time 2 months are done, you've made at least from $300 to $600 from that coin. Is that bad? It's not bad. Okay, that's good stuff. What if I have good capital? Can I trade 2 coins each year? I trade. Yes, if you have good capital. These best traders, all they do is trade more than one pairs. For example, if you have like 1,000, you can decide to use one coin. If it is very volatile, use one coin. If it is not so volatile, you can choose 2 coins that are not so volatile, and you divide 500 in each. So the advantage here, when you have I do not mean if you have your $100, go and set 10 coins. No, you have to set margin calls, enough margin calls. You find that you have like, in total, you have like from 40 margin calls to 200 margin calls. Okay, you find that every day there are margin calls being bought and sold. These coins, you have 5 coins, you're trading with $5,000, you have 5 coins. That means you have 1,000 coin in each coin. This means these ones are buying, these ones are selling, these ones are moving up, these ones are moving down, just like that. That's how you can use the bot to scalp the market. If you have good capital, you don't need the one-shot signals. For what? You don't need them. According to my experience, I've traded one shot. You don't need them. Set, maybe if it is a signal for long term, like it has been given like 20% margin call, repeat divide, and set your margin calls. Use sub-in mode real-time settlement. Leave the robot to do its work. Okay, let's proceed before we get into questions. So after doing this, for me, I will leave it on cycle for a reason. I want to maintain it so that it buys my margin calls, because if I put it on one shot, it is going, probably it may move up and it's going to sell me out before the robot buys my margin calls that I need to be bought. Then I click sell. Then after saving, you click strategy mode. This is where you don't have to forget. Sub-in mode real-time settlement is what enables the sub position to be sold. With sub-in mode real-time settlement, whatever is bought is sold and you're given profits. With sub-in mode, whatever is bought, it can't be sold. It can be sold, but will not be given profits, not until all positions are closed. Okay. With whole warehouse, everything that is bought, it can be sold, but at once. Then you choose. You have to choose. You have to choose sub-in mode real-time settlement. You click show, activate. Then you quit your bot. You go and relax. You give time the bot to buy and sell. Next week, we are going to look at compounding, how to use your capital gains, how to use those profits you've made to put them into your strategy again to make more profits. What if it reaches margin call you set? Then by the time it gets there, at least it will have bought enough and do not be affected by like someone who would not set enough margin calls, who would not set margin calls. So some of you, you're busy waiting for the market, but for those who have increased their margin calls, they're making sales in the deeper market. Isn't TroyaQ having a limit on capital amount? No limit. No limit. We tell you, we recommend you to start with $100 for a clear picture on the market, but it's never enough. Use $100, but it's never enough. Then up to, you don't have to say that up to maybe $1 million, up to infinity, as long as you have that money, put it there and trade. You may find that you have even like $50 and you become a whale. You start manipulating the market, that particular coin, you make it pump and run, and you make money. But if it reaches margin call you set, that means the bot is going, it is going to tell you margin call limit, it has been reached. Your margin call limit has been reached. So if it continues to go down, if you have more capital, you open. If you don't have, you be patient, because if it has gone down, it has to come up again. For sure, you explained it. I've had, but I didn't get your point about cycle. You mean when I'm trading one short, my robot buys 20, drops, and at a certain point sells like 3. Again, this coin falls here. The bot will not gain sub position. You did not get what I explained, my dear. Now, if all coins are bought, what happens? Okay, now if your coin is bought, what happens? You wait for them to be sold. If you've set your strategy as well and you've bought your coin, they're bought, then you wait for the robot to strategize, to buy and sell as you'll be looking at profits. You see today that you find, oh, they have sold 20 margin calls, they are worth $30, I've made $30 today, just like that. Okay, Brian, I said cycle maintains the coin on the market because you may analyze your coin very well. Okay, you set it well. Okay, then after setting it well, you want the market to move up, down, so that the bot buys your sub positions. Okay, but remember, the market doesn't move down just like that. It has to rise at a certain point. So if you've entered here, okay, this means that, and you've given 2% for the first 4 calls. Let's say they are bought, and the market happens to move up slightly by 2%, and you're on one shot. This means that it is going to sell 2% on one shot, and the coin is going to move out. But remember, your sub positions have not been bought. And after this coin is going to fall again. Okay? Now, if it is on cycle, it can sell 2%. It remains on the market because cycle maintains it on the market. Then if it happens to sell, then it starts buying. That's the simple explanation I can give you, Mr. Brian. Here we come at the end of our session. Guys, let me hope we've learned